Good morning and welcome to the Pirate Traders Morning Show. My name's Paul out of Houston, and I'm going to present what we think is relevant news for trading this morning. And this morning, I would say there's not a ton of relevant news, but we'll go with it. Core PPI was reported this morning, and it is flat. Generally, the markets have not reacted to this news. Overall, the VIX has gone down has continued to go down over the past 2 weeks after peaking about 2 weeks ago when the Nikkei erupted over bad news. And so that's good news for us, is that volatility continues to drift downward. When I look at overnight markets and I look in Asia, I see that Asia has rebounded, with Nikkei particularly up 3.5% overnight for us, and appears to have returned to about where it was 2 weeks ago. The European markets are flat, and basically Europeans are on vacation. They just they'll probably be flat for the rest of August, I suspect. I looked into Deutsche World, the German English language online paper, and for the most part there, they find basically the war in Ukraine is the main issue for them. And at the moment, the main news in the war there is Ukraine has taken over 1,000 kilometers, or about 400 or 500 square miles of land inside of Russia. And, the reason that's important is that over time, we think we need to get this issue off the table for trading purposes. But it's finally the Russians have reached back and sent missiles in overnight, drones in overnight to attack some of the forces. But frankly, I don't know if the Russians will be able to kick the Ukrainians out of Russian territory in the next couple of weeks. That's really what people are debating. I looked on Al Jazeera and also found about the same thing. Same Russian-Ukraine news, and then news about Gaza, which is unchanged. And then Reuters is another area that I check on each morning, and they actually came up with very much the same things that I thought of when I started going through my list of places to look. They also feel like the Nikkei has returned to its point. The markets are calm. Wow, that's true. And the PPI has come out and is also calm. And so the only real question that we can see disrupting the markets in the next couple of weeks probably is going to be oil prices. And that'll be, as a result, there may be a jolt if the Iranians retaliate against the Israeli attacks, or something more provocative happens in that conflict. So overall, I find it to be a fairly quiet day ahead of us. And I think with Charles's help, we'll be able to take a look at the indexes and what they've done overnight, if Charles is around. Charles, are you there?
I'm here. I made it. Thank you, Paul. Appreciate that. Real quick, before we jump into charts, I'm sure people are just curious. Is there anything that you can tell people about yourself that they should know? In particular, what kind of stuff are you trading? What markets are you focused on and interested in?
I trade NQ and ES. I basically have been trading for several years, and a long time ago, I was in private equity and lived in Russia for 13 years, worked in private equity there. And I had some Wall Street jobs, but they were not the Wall Street jobs that people make movies about. They were the Wall Street jobs where you're on your knees filing trade confirmations, stuff like that.
Exciting.
So I've been around the world, settled back into Houston, and but grew up in Mississippi. I mean, that's kind of the things about me.
Awesome. Well, thank you. I appreciate you doing this. It's for everyone that's watching now, we're going to start to build this out over time. We have two guests that are going to be hosting. So Paul will be here on Tuesdays and Thursdays. And then we have another host, D, that will be doing Wednesdays and Fridays. But that was great. So the idea is he's just going to give us the news that we need that might affect markets. and then I will dive
Or
into the
lack
charts.
thereof.
Yeah, or in today's case, lack thereof. Yeah, nothing happening. All right, well, let's jump into some charts and talk about what could be happening today in the market. So first and foremost, we'll start with my bread and butter. I'm sure most of you that are watching this now are members of the brigade. You're mainly focused on the ES and NQ. So basically, nothing has changed from what I talked about yesterday. I believe we have broken out of a balance area. Despite the fact that the momentum has been very mild, we've just had these tiny little super range bound days. We are getting momentum on a daily time frame. As painful as it might seem, that is what we've got here. We've got higher highs and higher lows. We broke out of a balance area. We came back and back tested it. And since then, we have had momentum in air quotes. So we should assume that momentum can continue as long as the market stays above yesterday's low today. As long as we stay above 53.49, we should be able to keep the market going higher. As far as targets to the upside, I would say the gap fill to 54.46. That is a pretty fair target for the day today. Again, if we can get some momentum. So we'll be waiting to see what happens at the market open. If the market were to open right this minute, it would be with a gap up. That would obviously be bullish to see, but we got plenty of time till the market opens, so we won't make assumptions ahead of time. But if we do start the day with momentum like that, it'll just be a question of, how long can they keep it going? Any support inside yesterday's range, so anything above 53.49 is bullish to me for continuation to the upside. Okay. The the NQ is basically in the same position. We'll pop up that chart here. So it's the same thing. We had a balance, we broke out, we back tested. We've got a very slow melt to the upside on the daily time frame. We should assume that could continue. So the target for the NQ, the first one will be 18,867. And then if we can still get momentum beyond that, 19,068. Okay, and all bets are off if we get below 18,524, which is yesterday's low. Okay, let's just jump on the candlestick charts real quick, and we'll bull through some different markets. So ES, just to visualize this was the balance. This is the breakout. Okay, same thing for NQ. That's the balance. That's the breakout. Okay. Let's take a quick look at the Russell and see what's happening with that. So the Russell had a lot of momentum, which all completely crashed and burned, and it is now back in balance. So the Russell still hasn't had the follow through that the ES and the NQ have over the last 2 days. It is still in a balancing area. And I just want to make note of the fact that it has been balancing essentially around this area for the last year. Okay. So this market is having a really, really hard time breaking away from the range. If it starts to break out of this little balance area that it's in right now, we can expect another move somewhat like this. Okay. This move, the reason they got so much momentum and so much excess on that breakout of the move was because they had spent so long going sideways. They just wound it up and wound it up and wound it up and wound it up and it finally broke. Okay. Well, now this counts as a back test. This counts as the market coming back to make sure, to double check. We definitely don't want to go lower. And then when we know for sure we definitely don't want to go lower, it can start to take off again to the upside. So I would be watching this area right here around 2,108. That is a good area for a breakout to happen. If you get above there, you're likely to start getting some short covering and another move to the upside. But for now, it's still in balance. And so you should assume it's going to continue to go sideways, maybe for another year. You have no idea. So we got to wait and see. Let's look at the Bitcoin. So again, just talking about balance, Bitcoin has been in an indecision zone for quite a while. And it keeps getting these dips and it gets no new high. That is bearish to see. Okay. So essentially the market makes this new move to the upside. Oh my God, it's going to the moon. It's amazing. It's going to $1 million a coin. And then it starts to balance. Okay. Well, that's fine, right? Maybe we just need to balance a little bit, before we'll be ready to go higher. Then it gets a dip. Now that dip should have brought in the buyers to go make a new high. Did it do it? No, sir. Couldn't get a new high. So what does it do? A little bounce and then a deeper dip. Does that dip bring in enough buyers to make a new high? Once again, not quite. Another lower high. So what does the market do? Another dip to the downside. Okay? This market doesn't have the buyers to make new highs yet. So it is essentially going to keep dipping until it finds that magical level where, one, they've squeezed all the weak hands out, and two, they've brought in the strong hands that want to take the market higher. The area that I'm watching right now with very keen interest is this trend line right here around 48,000. Okay. I think a dip to 50 to 48 now would be, probably the final low that the market has to make. Now, what would prove me wrong? What would prove me, okay, maybe I'm wrong. Maybe this was enough of a dip for the market to continue higher. I would say, look at this trend line right here. Okay. If over the next few days, the market keeps grinding lower, they need one more large dip in order to bring in those buyers. If they can start to make new highs in here, particularly getting above 62, well, then maybe that last dip was enough and we can look for a larger move to the upside. So I would say on a daily time frame today, over the next few days, I would expect a continued slow melt to the downside. If not, if that doesn't happen, then something else is going on and it might be able to start building momentum, but I wouldn't look for any real momentum until it's above 62 once again. All right, that's the corn. Take a quick look at the dollar. Not much happening there, balancing forever. We'll take a look at the VIX. Obviously, the VIX had a massive, massive spike last week. Some crazy VIX up in here, but that has cooled off and it's coming back down. We'll be looking to see if over this week, there's some numbers coming out this week. And then, of course, there's Fed stuff next week. So depending on how the market reacts to all of that, the VIX should be able to cool off back down to its normal levels. If it does, we can start to continue the slow melt to the upside. We'll take a look at gold. Gold is doing its thing. Very slow moves, but new momentum to the upside. So, I just expect it to continue to slow melt higher as long as inflation continues. Obviously, gold is being measured in US dollars. So as US dollars are worth less, gold will automatically be worth more.
You mentioned a couple of weeks ago that there was that it was breaking out after a multi-year consolidation. Is that something that can you expand on that a bit?
Yeah, absolutely. Let's put it in a monthly chart. So gold doesn't do anything fast. Gold does everything over very, very long periods of time. So you had this all-time high over here from like 2011, okay? The market basically spent the better part of, 8-9 years going sideways in a range, and then it broke and it got above those highs. Okay, once again. Well, what did it then do? Another, 4-year range going sideways like this. So breaking out of that range should lead to momentum, right? It should lead to a move. I would say we've pretty much already done that. The move that we would expect on the breakout of this range, we've kind of already accomplished that. But as long as the market still has momentum, we don't fight momentum, right? As long as it continues to one time frame higher, we assume it can continue to one time frame higher. And on the monthly time frame, it is still one time framing higher. Okay, you can see from that breakout, this is your balance. From that breakout candle, higher lows, higher lows, higher lows, higher lows, higher lows. So how far can they push it? I honestly don't know, but they've still got the momentum.
Cool.
All right, we'll take a look at crude oil. Again, bouncing in a range. I expect crude to run out of steam here pretty soon. Likely right in this area. You can see pretty much just right where it almost the high of yesterday. So we're looking at sort of 80, probably 80 and like 5 cents 80 and 25 cents. Okay, so that's where I'd be looking for some resistance in crude and a bit of a pullback, just because markets don't go straight up forever, right? This is a pretty big move up. They're pushing into previous, support, which often becomes resistance. So I'd be looking for a little bit of a pullback towards 78 in the days ahead. Really quick, we'll fly through the Mag 7. Nothing super exciting happening there, and they're all pretty much doing the same thing. They all had a massive pullback last week, and now they're kind of recovering from that. Looking at Apple here, again, it looks like this is an area where it should start to get some resistance, maybe even today, a little bit of a pullback. That will depend on the larger market momentum. So if the ES continues to melt higher today, if the NQ continues to melt higher today, assume the Mag 7 will also continue to move with the larger markets. But this is an area where we would expect it to start to get resistance. And again, this is a lot of momentum up. So a little bit of a pullback in here, maybe towards, 212 would make sense to me either today or tomorrow on Apple. Amazon sitting right at a massive gap down. So this is a tricky one to make a call right now, but I would just say if they get back up into this gap, I would look for Amazon to do some bigger days, trying to fill that gap to the upside. So you could see previously here, there was this unfilled gap. And the day that they came back for it, they completely made a massive move. So there's a lot of emotion in this moment in Amazon. A lot of people are short. And if they were short up here, they're going to start questioning if they still want to be in that short if we get back up into that gap. And a lot of people who are longing the lows are not looking to take profits yet. So you've got a reason to squeeze sellers, but not a reason to squeeze buyers. Buyers still have a good target to the upside in filling that gap. So that could lead to more FOMO buying, more chasing, and we could get some big days ahead in Amazon if the market can get back up in that gap. So that is getting above 168.77. Okay. Microsoft looks great to keep the move going. I would say the next major resistance is around 418. NVIDIA, the stock that never gives up. Never, ever, ever. So they had a good pullback to fill some previous gaps. We all were there and thinking this is insane, the momentum that this market is creating here. Well, they came back through all of that. Okay. So this to me is very similar to Bitcoin. This chart reminds me a lot of Bitcoin right now, which is that they made a high, they pulled back, they couldn't get back to that high. They needed another pullback. They couldn't get back to the high. They needed another pullback. So we're playing the same game here, which is if they keep bouncing and they can't get the momentum to head back up to the high, they're going to need the next pullback. Okay. And it could be pretty big. It could be a pretty big pullback if they can't break through the highs. So same thing as I said with Bitcoin, just draw yourself a trend line here. Don't worry about being a buyer until the market breaks through that trend, because only then can it really start to get momentum. And that would be momentum that you could trust. Right now, this to me still feels like another back test of the trend, and it could still be smacked down once more. Then we got Facebook. Facebook. That is a tough read right there. So Facebook also looking like it can use a pullback pretty soon here, probably around 523.30, which is, right what we're pushing up against now. So I would be cautious if I was along on Facebook. This is a lot of momentum. They don't go straight up forever. This is a great area for the market to run out of steam. Okay. And if it runs out of steam there, we're pulling back down towards, 490s. Then we'll do Tesla. Again, very tough read on Tesla, man. This is just such a volatile stock. It's crazy. So I would say Tesla is very similar to me to the Russell, what we talked about. It's in this little balance area right now. You can't trust momentum until it breaks out of that balance. Until it gets above, we'll call it 200. Okay. As long as it's inside this range, it can just keep going sideways. Maybe for a month straight, it could go sideways in a range. So I wouldn't be bullish on the Tesla until it broke out above 200 and we started to see some momentum there. If it does, 206 is the next target, filling that old gap. And then last, but most certainly not least, we'll do Coinbase just because I love me some Coinbase. Coinbase obviously moves with Bitcoin quite a bit. So if Bitcoin can break through its downtrend, that trend line that we talked about, and start to gain some momentum to an upside, you can expect Coinbase to do the same. The interesting thing about Coinbase is, though, look at this range that we've been bouncing around basically all year long, going sideways in this range. This is a balance area, okay? It's not perfect, but the idea is they tried to break above, couldn't, came back down. 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 So if we come back up into the range, which is basically filling this old gap that we left behind here with the momentum down, that could lead to a very quick move back up towards all-time highs, the opposite end of the range. Okay? A look below and fail of a range this large will force all the shorts on the way down to cover. And so that could lead to some momentum. Again, wait till they break out of balance. So wait until they get above 197.97 before you look for that momentum. I wouldn't go long now expecting it to happen because they could just as easily break this trend line and start to head lower, right? Start to head lower. But yeah, if they get above there, they get back in that previous balance, you could get some serious short covering in Coinbase. Anything to add, Paul?
No, I just checked the markets. I mean, they have, we're up above yesterday's highs slightly, but it's not really bouncing all over the place. So we're ready for a good, a calm start for a calm day.
All right. Well, let's see if we get a gap up. Let's see if we do get a gap up. Let's see if we can hold that gap and get that momentum going. And then we'll find out if we're going to get another range bound boring day or if we can finally get some momentum in this market. Thank you all so much for joining us. And if you have any feedback that you'd like to give, throw it in the chat. Let us know. Leave comments. We are going to be slowly building this program out. So if there are things you wanted to see that you didn't, things you didn't like that you don't want us to talk about, good, bad, or otherwise, give us your feedback and we'll try to improve. Thank you very much. And we will see the members of the brigade in the live stream. Thanks, Paul.
Thank you, Charles.
Bye, everyone.